What's going on, everybody? Mando Trading here on November 23rd. In this video, I'm just going to walk through the trade that I took yesterday on November 22nd, the day before Thanksgiving. If you like these walkthrough videos, please like, subscribe to the channel. I'll make more if everybody likes them. So let's get into it. All right. So just before we get going on this video, I just want to give a little idea as to why I considered this trade even in the first place. So ultimately, early Wednesday morning, we did fade quite a bit, getting down into discount of an hourly range. We did start to grind higher, but right around 1:30, and this is tends to end the lunch session. So right when the lunch session decided that clocks are turning, we're going towards that 2 o'clock silver bullet. I like to map the range of the lunch hour. So I'd like to identify the lunch high and the lunch low. So I use from 12 p.m. Eastern to 1:30 p.m. Eastern as my lunch hour. And typically these trades occur, and sometimes they happen pretty quickly. This one took a little bit longer to digest, but with Thanksgiving tomorrow and just price action as a whole for the entire day, it was much slower than it tends to be. So in this case, did it take a little longer? Yeah, it did, but that's okay. Paid nonetheless. So you'll notice I have the lunch high annotated, and following us sweeping that lunch high, not only did we take out the lunch high, we also created something called the three drives. And when this chart zooms out a little bit, you'll be able to see it much more clear, where you'll see that there is almost three humps. And those three humps, what they can signify is that as we continue to move higher, all we're doing is baiting people to enter the market and then taking their stop losses almost immediately. So by gathering all of these stop losses and liquidity, aka money that drives the market, right? We're sweeping all of that liquidity in order to create some sort of move that's going to occur. Now in this situation, again, if you notice, right at 2 o'clock, we create a bearish imbalance, and this imbalance was in the form of a fair value gap. Price reached into it, wicked above it, never closed above. So that is an indication as to why my stop losses are where they are. You'll see it says buy stop. They're just above the high of that down close candle. So this is currently on a 15-minute chart. And if we're to go down into a 5-minute chart, you'd be able to see. But I have the 15 on here just because it is an order block, and I wanted to at least show that. So that was the thought process here. We were in a little short-term bearish market structure as well. So let's go. We'll take a look, and hopefully we can speed this up a little bit. So now at this point, prior to me moving right here, but I was risking 6 points. 6 points is $120 times 4 contracts. So really, do the math. My losses would have never went over $480 to make potentially close to $3,000. So I like the risk reward, but you'll notice that right here I moved my stop to the previous high of the candle, at least one of them, just to make sure I lock up something. It is frustrating when you go up quite a bit on a trade and then you automatically or it'll erase it really quickly. And overall, on a higher time frame, to me, we still are in a bullish market structure. So I technically was fading the trend a little bit here, but the short term was it was begging me to take this trade, so I did. But so there's my first stop. You'll notice my buy limits right here. I'm going to move it a little bit lower, but the reason I have one buy limit there, or one stop in profit, I guess you can say, or take profit, is because we do have a bullish imbalance there. So I wanted to make sure that if we were to get a bounce from that point, which we could have, right? We could get a bounce on that bullish fair value gap. We could get a bounce off the bottom of this large bearish imbalance, that red line. That could be previous resistance turned support. So I wanted to make sure I locked up something, right? And at that point, you're going to notice that I also do drag my stops in profit. That way, no matter what, I'm coming out of this trade with something green. But ultimately, I like to move my stop in a way where, after I make a certain amount of money, I usually target 20 points, but at that point, I'm a little aggressive with the stop, and I'll just take the profit, and I'll try and get this idea, to be a free idea as soon as possible by just moving my stop into the green. So here's actually a pretty good indicator. I'm going to freeze it really quickly. If you look really, really closely, and this is why training your eyes to do so is very beneficial in my opinion, you're going to notice that there's a little gap down on a 1 minute time frame, right? So this would be considered a bearish volume imbalance to the downside. Anytime we're gapping, whether it's up or down, that's just showing me a sense of urgency to get to a specific point. So in this case, we're gapping down. To me, we're looking lower. I want to see the candle close, of course, and on a 1 minute, it's not the largest sample size, but still a little useful. So let's continue here. I'm just, flipping through time frames at this point. But the expectation at a certain point here is going to be, we want speed. We want it to get to its destination or liquidity ASAP. And sometimes it takes time, and that's okay. The day going into Thanksgiving, my expectation for yesterday really was nothing. I didn't think I was going to take too many trades, and I ended up taking 3. 1 in the morning that I did well on, second that I got stopped out on for a loss, and then this one, which made everything a whole lot better. So now that we're down as much as we are, I'm sliding another stop in profit. So now all of my stops are in profit. This is a free trade, and I can let it run and kind of fulfill my idea as a whole. Where are my targets placed? I have them all strategically placed. I have one currently at a bullish imbalance, and also the bottom of a previously bearish imbalance that we're up into. You're going to notice I slide one more up into a bullish 5-minute order block. Again, not the biggest sample size, but a place where a bounce is possible to occur. And then the last one is at relative equal lows and the lunchtime low, where that tends to be a staple of the market. Sweep the high or sweep the low and go get the other side. So now my stops are all there. Almost got stops on my first contract there, but we did have that volume imbalance we talked about before, held up, and price rejected that perfectly, didn't get me on the stop out. And now we should start to speed up here. But at this point here, I'm thinking to myself, look, no matter what, I'm cleaning up. I'm making a little bit of money regardless. So let's see. I think this is the candle to really do it. But it's a little slower because I don't have this on speed up. But again, we wicked in on the previous candle into that volume imbalance down, and here's your flush. So there's that move to the bottom of it. Squeak out like another point or so, whatever. Now I flip to the 1. You'll notice on the 1 we do have bearish market structure, very small time frame, small sample size, but nonetheless. So now this is a technique that I use a lot when I do get up in these contracts and I'm happy with where we are in terms of like the money that I'm making on it. I slide my stop right to the high of the previous candle. So there's target number 1 hit. That stop in itself is about $400. Now I have 3 left to play with, and here I'm much more aggressive at this point with where my stop is going to be. And we let it rip. So you'll notice in a second here, I'm going to move that right up to that was a bullish order block right there. Again, small sample size, but a place where I've seen in the past price bounce from. Not strong enough to take me out, but enough that if it does bounce in this situation, I could just reload it back up in, this is going to form a bearish fair value gap. So I can just re-up here. I'll just take the money off the table and limit my risk. But there's your little bounce to start this 5-minute candle right off that bullish imbalance right here. But you got to have somewhat of a stomach. I mean, at one point this contract was up $1,200. Or these contracts, I should say. And right now it's $980. That sucks, giving back, $250. But I had faith in the play and what the draw on liquidity really was here. So I'm going to speed it up a little bit because, no, there it is. Don't need to. Ready? We're about to get that tag right here where I take one more contract off. So at this point, that is another $400. Think about it. It's up $1,200. I sell 1. That means I'm up $400 on 3. So I'm about to take this off. It's coming shortly here. Come on, here we go. No, there it is. Ready? Boom. Okay, there's target number 2. And now my third and final target for my final 2 contracts is at the relative equal low or lunch low. The interesting part here, and this is why I felt pretty good about this trade, if we were to go back and look, we actually have another set of relative equal lows below. And that's where I end up moving this target to, because this was a melter indeed, and we were absolutely looking for downside liquidity. So you're going to see me do it shortly here. Where are we? But I'm also going to be pretty aggressive with my stops and profit. You see, I just moved it right to the next high of the 1 minute candle. Giving that back would totally stink, but again, it's okay. We're up quite a bit. There's my move to the other set of relative equal lows, and you see that that second low does not go down and take out the previous. If it were to take out the previous, then liquidity has been breached, but has not been. So to me, that's just 2 sets of people buying that thing up to almost protect their initial order. Market's going to want to go back down and get that. Here we go again. Look very closely. You're going to see this time a 5 minute volume imbalance down. At this point, I felt pretty good that we were going lower, right? So I have my stop loss right now right at that 930 level, and that stop is again in profit. And at this point, it's in profit, 24 points. So at the very least, I'm making 500 off each contract, and I have 2. So there's your lunch low. And now we wait. I meant to do a smiley face, not a wink. But this is why I like to record them. Because a lot of people, it's easy to just say, oh yeah, I went short there. But I don't think many people would do this because it's too much pressure. And 2, I don't think people would be able to have an explanation for the entirety of their trade, every bit and piece that occurs within, like where their stop loss is going to be. Why is my stop loss there? Right where I have it. It's right above 50% of the bearish imbalance. If we were to reclaim that 50% of the bearish imbalance, I wouldn't feel as good about it. So now moving stop right to the high of the previous candle, down on a 1 minute, and let her dump. You're going to see I get even more aggressive with it because we did take out those relative equal lunch lows right there. Obviously, my ultimate target is 10 points away, but if price was to recover quickly to the upside from that point, I would just take my win. And here's one more bullish imbalance that we've already tested multiple times. So at this point, my expectation is that it's probably going to slice. As long as we can confirm some sort of down close. There it is. We're almost to the target. But relative equal lows, it is a great thing to add to your your toolbox, I guess you could say. People who learned the double bottom, I hope you learned it correctly. They mean different things, and I need to make a video on that. I really do, on what is the criteria that needs to be met for a double bottom. But there's the melter. Do we end up going lower? Yeah, it's okay. I'm not sweating it too much. I cleaned up on that to 48. That's about 50 points on the 2 cons, and then trimming along the way. So this is a pretty good execution. I felt totally in control the entire time, managed risk really well, and came away with a really nice amount of money on a day that I didn't expect to really push any buttons. So yeah, if you like these recaps, please again like and subscribe to my channel. Hit me up on Twitter, drop a comment, let me know what you think, and have a happy Thanksgiving, and we'll talk soon.